Hello, everybody. This is Coach D with TackleTrading.com here to talk to you guys about the importance of multiple time frame analysis and understanding the combination of multiple time frame setups. This is a good example. It's Nucor. I picked this stock fundamentally. In fact, I actually pulled it off of the IBD Investors Business Daily top 50 stock list. And I like it for a couple of reasons. One, it's not terribly expensive stock. It's relatively well tradable. It pays a dividend, about a 0.5% dividend, not quite. But it's got a nice little pattern right now. And when you go and you ask people, which way is this stock moving? Well, some people say, well, it's going down lately, and other people say, well, overall it's going up. If you kind of look at it from the big picture, you can say we're in an upward trend overall. And sometimes you can look at things like your 200 period moving average, for example, to get an idea of where price has been. And really, kind of what I see here is the following setup. So I see $60, big fat number. I love stocks when they're trading at big fat numbers. It's just a really nice calm, and you'll kind of notice that certain stocks ping pong around certain price points, like 45 bucks. That's kind of an obvious price point. Resistance 50 bucks. You can see those pretty obvious price ranges. Anyway, so we see this coming down off of some big drop with pretty heavy volume. Gets quiet over the holidays like we expect. The next drop is smaller and smaller still. And so we've got a textbook slowing momentum pattern, and which this is a daily time frame. And when you back it out to a weekly time frame, you see a really, really, really good looking bullish retracement pattern. And so you got, boom, first thing it establishes a nice strong new high on good momentum. The pullbacks on lower volume, it's come into that $60 support resistance zone. Here's a big fat cup and handle if you missed it. And the pullback down here with the consolidation in dojis. So now, this is a pretty good looking candidate, and we've got earnings coming up down the pipeline here, not too far out. We've got when is earnings coming out here? It is coming out on the 31st, looks like. And then let me show you the intraday chart. So you got this slowing momentum pattern here, weekly bullish retracement, and here's that winner winner W, winner winner chicken dinner. You guys see that there? And so we're looking for that W breakout on the slowing momentum pattern. And when you drop down into intraday, here's an hourly time frame. Now you can see kind of this big, drawn out protracted W, and it becomes easier to identify points for trigger, for example. If you want to make sure it really cleared 62-ish, that would be a good example of where to place a trigger. And then of course you got the lows, and so you can set up trades where you're putting triggers here in the $62 ballpark, 63 in that neighborhood, and then down here stop losses below 59. So you can look at that as like a three some odd dollar risk proposal, $4 on the high end. And that's fine, because when you back out and you look at it from a weekly perspective, if I were to do just a channel forecast, just looking at it from like a not overthinking this, here's the bottom of the starting trend, here's the general trend angle, and kind of ballparking out the top, that's an easy way to do it. Another thing you can do is draw the channel on the top and kind of look at it from that regard. So you've got this, upside target, which I see here is, channel, targeting is subjective, and the obvious number is 70 because it's been ping ponging between like 40 and 50 and so on and so forth. And so you'll see this kind of running in, here's just an example, 45, boom, 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 65, and that ran 20 points on that weekly chart. So another 20 points up is now out of the question, but I'd say at least 10. So I'm going to shoot for about 70. So what that basically means is you got, a really good reward to risk ratio. If you look at it from, let's call it 62 just to make the math easy, 70 out there target, stop losses below, 59. So you got, $3 risk and $8 reward, and then reward, 8 divided by risk, reward to risk ratio, and you'll be able to see that that's way better than 2 to 1. So that's a nice little setup. And there's no guarantees on it, but I wanted to show you a good example of a multiple time frame setup where the odds can be stacked in your favor, and we like these kinds of examples, and so something to take a look at and consider.